Okay, very good morning to everyone. Thursday, 31st of May. Usual routine, I'm going to run you through some of the latest headlines to give you a feel for market sentiment for this morning and some fundamental analysis for the directional bias that we have for the day ahead. And then Sam will overlay that with his technical kind of view to play out some of these strategies. But looking at the markets this morning, you have the dollar on the back foot actually, so dollar index is back through quite firmly now the 94 mark and down 0.25%. So consequently both major currency pairs in the top left, euro dollar and cable, are trading on the front foot. We're up about 40 pips each respectively. Euro dollar back above 117, cable well above back 133 handle now. Equity markets minor positive territory in the European indices to get things underway, albeit the futures have backed off slightly, and that does follow a pretty steep climb in one direction, if you like, in US equity markets yesterday, which finished in firm positive territory. A couple things then to get you underway in what is, I'd say, relative risk on atmosphere, given the fact that people seem to, as we were kind of intonating towards on Monday, people have kind of got off this panic episode of the Italian crisis, at least for the time being. That's not to say that that's gone away as a risk. It certainly is still there and present. It's just the market now has kind of stabilized, and as we were talking about yesterday, rationale almost has returned to that extent. Quick look then through the headlines and might explain a little bit behind the reasoning of this dollar weakness. Why is that? Well, you know, you can almost forget about Italy for a moment because trade wars are about to become the headline again in terms of the narrative in the short term. This is because you have the EU bracing for Trump broadside as still tariff deadline looms. The headline being run as the main story on Bloomberg this morning. So let me give you a quick run through of what the situation is here. The European Union is bracing for the trade offensive from Trump amid reports that the US is poised to impose tariffs on steel and aluminium from the bloc. So if you remember, just to recap, Trump slapped a 25% tariff on imported steel, 10% on aluminium in March, but granted reprieve for the EU specifically. But not just the EU, this was Canada and Mexico, up to June 1st. And obviously that is tomorrow. So that deadline's come around very quickly. The period and the extension that he gave when that was originally announced back in March was for them to have further discussions. But realistically, you know, how much of those discussions moved on? Probably not a great deal. And as per usual, as is politics, this is going right up to the 11th hour. The Wall Street Journal last night cited people familiar with the matter, and they said the Trump administration is prepared to follow through on its threat to impose the levies on the EU, which brings about this question then is, what is Europe going to do? Well, for the EU, that's meant that they potentially could lodge a complaint with the WTO, which is the World Trade Organization, on imposing retaliatory tariffs of 2.8 billion euros of American imports as soon as June 20th. The details, though, that Europe have said will be, and how they will respond, dependent on the US's decision. Macron of France has gone as far as to say, well, we're not going to make any decisions when we've got a gun held to our head, i.e. in reference to the kind of tactics, hardballing, if you like, art of the deal from Mr. Trump. So definitely this is a thing you're going to have to look out for in headline risk to any of the strategies you might be contemplating as we go through the session. I would imagine that so far there's already been source comments overnight. There's some been coming from the Wall Street Journal, the Washington Post. I would imagine more to come ahead of the actual deadline tomorrow on what exactly is going to happen. The question here is has Trump had the effect that he needs politically, domestically, by being quite forceful on the issue, taking it to the deadline, only to then, I think quite a plausible scenario could be for more time, to continue the exemption of those aforementioned countries for another period of discussion. So really not actually much happens, but the threat is there, and that's enough to get the job done from what his objectives might be. Now, just to give you a bit of a flavour of what might be in store for today, this was a comment that came out at 7 a.m. this morning. US Commerce Secretary Wilbur Ross said that US and steel aluminium tariffs on the EU are to be announced before markets open or after markets close today, adding that the US does not want a trade war. However, 18 minutes later, US President Trump has told French President Macron he would block German premium cars from entering the US market, being cited in German press. So obviously you've got the Commerce Secretary saying we don't want a trade war. The President comes out, complete opposite. This isn't new. This shouldn't come as a surprise to you, but I do think that you do need to factor this in. I think if you're going to enter a trade and you're looking to, if you want to call it trade the news, if a big headline related to trade comes out, it severely dents sentiment, let's say a negative way. I think you've just got to be a bit realistic about how long, the longevity of these trades and the ambition of those targets, because granted, if something really spectacular is announced, then sure, you're going to look for a sizable move in the market. But what we have commonly been seeing is that, and certainly with the Trump administration is a case in point, he says this, she says that, the president says this. And this tends to lead to a large bounce of swings in volatility and direction, which means you need to be a little bit more prudent, I think, with executing the timeframes of holding these trades. So that's the trade situation. And I think for today, whilst we continue to monitor European politics, this today and tomorrow will become a renewed influencer of short-term market sentiment and direction. So do be aware of that change. It's likely to be ongoing, particularly given the fact that the market now has got over, at least for the moment, this Italian episode that it had on Tuesday. A few other things then. Looking at Italy, just to keep you the latest. But really I want to talk about Spain a little bit, because there's some interesting things developing there as well over the next 2 days. But with Italy, this is kind of where we're at. And Italy's president has asked the populists, call me when you're ready. The head of state has put Premier Designate Cottarelli on standby, i.e. will he be governing a kind of technocratic interim caretaker government until potentially new elections occur, as we were discussing earlier this week, that could happen technically in the end of July or possibly later. One thing we heard yesterday, if I flick over here, was you had some ECB source comments. If you remember, only about, 2 months ago, euro-dollar, I mean, let's just have a look at the chart here. Where was euro-dollar trading? Just at that high, and how long ago was that? Because it wasn't that long ago that we were all the way up at a 126 handle. Check that out. That was only, we were up still at a 24 handle basically a month ago. Just over, maybe 6 weeks. So the value of euro-dollar has gone from 126 to 116. That's a pretty monster move in that time frame. But the narratives have changed considerably. And so one of the question marks here is, we were talking about the ECB and tightening. The market was very fearful of coordinated global monetary policy tightening, obviously led by the Fed, but the ECB intonating towards what they're going to do with ending their QE program, obviously towards the end of the year, and then the subsequent rate hikes to expect thereafter. Well, what about Italy? If we have a complete breakdown in Italy and that causes a contagion effect across other European nations, is this going to shackle the ECB's plans that they may have had in the pipeline? The sources yesterday from Reuters would suggest that that's not the case. That's not the role of the ECB. And this is a political situation, so not one of which they have the authority or right to get involved in. But certainly this is something which I think you just need to be aware of in terms of ECB commentary. Every time there's an ECB speaker scheduled or any ECB type events, this is the kind of key questioning that I would expect that journalists will put forward to the governing council, and this is what we're going to be having to judge now. Has this been delayed? Will QE be extended? Will the period of winding down QE be a prolonged one from what is currently expected? And this would obviously fit that fundamental view that the euro could potentially continue to see weakness. The only thing now in the short term is, given how hard and fast the euro has fallen, obviously it's been one of the biggest continuation week after week falls in the euro we've had pretty much since the inception of the euro in itself, going back to 1999. And if Donald Trump starts to ramp up the protectionist view, but if that weakens the dollar, might that counteract then this downward trend we've had in euro dollar, more so because dollar weakness. So a couple of things just to be aware of there. Moving on though, wanted to have a quick chat and get you up to speed on Spain, because not really a lot of people are talking about Spain, and the conclusion of this is, I think that's probably a fair assessment, because of the risks are a lot different to Italy, I would say, a lot less potent, and timing is obviously key. And with Spain, given its fractured nature of its political setup, even if there is disruption to the current government and the PM Rajoy, the likelihood is not a lot's going to get done anytime soon. Sounds like we're talking about Italy again, but this kind of then removes that kind of fast reaction to reprice assets. But let me just give you an overview, because you're probably likely to read about Spain a lot more tomorrow. So Spain's parliament is starting a formal debate today. And this is a formal debate on the vote of no confidence in the current Prime Minister, Rajoy. The vote is set for tomorrow, so obviously the hearing today, the vote tomorrow. The motion's been brought about by the opposition party, which is the Socialist Party, which their leader is called Pedro Sanchez. And after the end of last week, what happened was there was a corruption case heard in Spain against the former officials who were linked to the PM, Rajoy. And actually, they were found, and the party, guilty of operating a slush fund. So because of this, the opposition party want to call a vote of no confidence. How can a PM run a country when he's been, lack of a better word, a naughty boy? So will the motion pass? This is a key thing. So what is the likelihood of this vote of no confidence going through? What does it mean for financial markets? Well, all the main opposition parties want the current Prime Minister, Rajoy, to go following this verdict on this case from last week. But there's little consensus essentially on how this is going to be done. There's basically two ways this can happen. So the main opposition party, they could be backed by the far left party and could pull enough votes together to topple the government. The first is winning the support of the Liberal Party. The problem with that, though, is that the leader of the Liberal Party wants Mr. Rajoy out, but that vote would put their rival, Mr. Sanchez of the Socialist Party, in power. So you start to see how messy this becomes. They all want the same thing. They want the PM who's in place now gone. The only problem is, though, you've got to start supporting and teaming up with other parties with the opposing political view. This is the complication. Second option could be the opposition here. So Mr. Sanchez of the Socialist Party could seek support from smaller regional parties. These would be nationalist parties like Catalonia and the Basque Country. This, again, comes with some complications. If the two Catalan independence parties do support Mr. Sanchez, it would put the deciding votes in the hands of the Basque PNV party, which has 5 seats in parliament. So you're talking about only a few seats. Spanish parliament in size, to give you a reference point, is 350 seats. But we're talking about potentially 5 seats could tip the balance. Like Mr. Rajoy's PP, the PNV is towards the political right, though. And so may be wary of putting a socialist leader into power. The PNV also won a very lucrative deal because Rajoy's government wanted to get them on side when they published their 2018 budget. So you can see here how there's very much not a done deal, even though they might have a collective and shared objective of having a new Prime Minister. Actually seeing this come to fruition is incredibly difficult. what happens if it does pass, i.e. the motion of no confidence? If the motion passes tomorrow, then Mr. Sanchez, the Socialist Opposition Party, would become Prime Minister, despite his party only having 84 lawmakers in a 350-seat parliament, as we just said. Yet the new government would need the support of the far-left Podemos party and the pro-independence Catalan parties to get anything done. In practice, then, what the end result of this is, it's unlikely to be able to pass any meaningful laws. And that last point is really key, because from a financial markets point of view, the risk obviously is, what if a new government comes in and drastically changes laws, which mean the fiscal situation deteriorates, or so on and so forth, which totally changes the composition of the creditworthiness of Spain. Markets need to reprice, default risk, and so on. Hence, like we saw with Italy. The key here is that even if he goes, not a lot's going to change in the short term, at least. If the motion fails, so if tomorrow's vote fails and Rajoy survives, is that the end? That's not the end, because all that happens next is the Liberal Party will then launch their own vote of no confidence. So it just goes to the next party to do the same thing, and we get a repeat all over again, but the net result is the same because of these complex nature of the setup of their political parties. The Liberal Party, in fact, want to propose an independent Prime Minister whose task would be to call a snap election. So, in summary, the politics are quite different from Italy, in a sense. The socialists are on the centre-left and are pro-European compared to the more extreme alternatives that we're seeing in Italy, which the risk of a snap election with the 5-star in the league could be potentially that cajole sentiment for a more nationalist view, and a Euroscepticism re-emerges, if you like, and so on and so forth. The socialists, in looking at Spain, similar to the ruling PP party of Rajoy, would also be a minority government making big policy shifts difficult, and that's the bottom line. That's why I think the market is fairly comfortable with the risk on the table for the Spanish situation. So that's your Spain update. Hopefully that gives you a bit of a flavour of what's been going on. Next up, a few other headlines. I'll hand you over to Sam. This was the S&P 500 close from yesterday. A couple of the sweet spots, if you like, of the outperformance on a sector basis. Obviously, basic materials saw a pretty decent move yesterday. But financials is what I wanted to look at. So you can see here money center banks and some of the other subsectors of the financial industry saw a decent move to the upside. Now, one of the things that a lot of the papers are talking about is that US regulators begin to ease the Volcker rule. Now, just a very short summary here. This was the financial regulation that came into place post the global financial crisis to try and stop kind of over-leveraged speculative type of positioning and trading from major financial institutions, which arguably were guilty of being the cause, if you like, of the financial crisis. 10 years down the line, we're now starting to unwind this, and the financials have liked it. The financials have always been against this kind of overarching regulative environment, because it means that it shackles them. It means they haven't got the flexibility needed in what they say is their ability to facilitate order flow on behalf of the client. Believe that if you will, but that's the argument. And under Trump, this has been one of his next big pushes, and we are starting to see this now materialize. Is this going to have a big, massive, immediate effect on the market? Well, the market has known this is coming. It's kind of built this into prices. Financials, if you remember, 2017 saw some awesome gains comparative to the benchmark S&P as a lot of these proposals were tabled. But much like the corporate tax plan, once it goes through, you do still often get this little bit of a knee-jerk reaction higher again in sentiment over the sector, and consequently, obviously, financials is the second largest sector of the S&P, off the back of it's actually being implemented, because there's always that risk with Trump. So something to just also keep on your radar. Finally, some data overnight. I'm not talking about this freeze frame of Morris Green. Couldn't have paused the screen better there. But talking about Chinese PMI data, that's come out overnight. Non-manufacturing index in China up for a third straight month. I think the manufacturing figure was an 8-month high. This is what it looks like here. China's factory and service gauges kept upward momentum in May. So the white one, still at this point at least, probably the more influential on the manufacturing side. You can see from the lull, the beginning of the year, it has continued to shoot up at quite a rapid pace, back up to the higher bound of levels that were seen towards the summer of last year. So some positive signs coming out of China, which will probably be felt with a positive response given the uncertainties that might have arisen from the trade war that's obviously ongoing with the US at the moment. At the moment, domestically in China, indicators are forward-looking in these PMI readings that things are looking relatively healthy. All right, quick look at the calendar. Let me hand you over to Sam. Fairly busy day, but just going through the calendar chronologically from where we are at the moment. 9:30 UK data, mortgage approvals. This is a non-event. You might have seen you had nationwide house prices this morning. On the year-on-year figure, I think house prices were down for the third time this year, which means that basically the housing market in the UK is the worst it's been, pretty much, in terms of appetite and demand side since the financial crisis. So rapidly different from where we were from pre-Brexit era. But mortgage approvals, this isn't really a consideration for central banks, certainly the Bank of England, so therefore net response is not going to have an impact on the pound. Going forward, probably the most interesting thing of the morning is going to be, from a data perspective, is the May flash CPI reading from the Eurozone. So keep an eye on that at 10 o'clock if you're looking at European assets. Then into the afternoon, you get the various other measures of job indicators as we head into the non-farms report on Friday. So you've got Challenger layoffs, and then Chicago PMI coming in the afternoon, which has an employment constituent. Other US data, you've got the PCE numbers, personal incomes and spending, Canadian GDP, US pending home sales. I think this is going to be relatively, unless there's something absolutely shocking that occurs, likely to be the same drill as yesterday. We had ADP, some pretty interesting numbers, US trade balance, but nothing really moved the market. That's because the market's attention is elsewhere. What I've discussed in this briefing is that a lot of the attention is going to be back on the trade front. So looking out for tweets from Trump, trying to follow that story, that could be the real catalyst for market sentiment today, rather than the economic data, which I think is not really a big factor, not unless it's a really outlying number. But still, I would definitely be lightening positions, if not out the market, over some of the bigger headline risk events. So CPI for sure in European assets, Chicago PMI is a big figure as well. And a CAD, of course, for the currency there, following the more hawkish statement from the Bank of Canada yesterday. The DOE numbers as well. Don't forget, with the DOE all inventory numbers today, these come half an hour later than normal. So it'd be 4 p.m, not 3:30. This is always the case when it's delayed by a day, when there's a US bank holiday, as there was on Monday for Memorial Day. So we'll look at that in more detail later. And we'll review the APIs which came out last night. Speaker-wise, nothing really too much to focus on till this evening. So only of the live guys, if you're sticking around late. You've got Bostic, Bank of Canada, Deputy Governor, and Fez Brainard all speaking. Probably Brainard's the one I would be most interested to hear from. She tends to have a more dovish-leaning stance, but she is speaking specifically on the economy and monetary policy outlook, and that's going to be at 6 p.m. If you're in the live room. Okay, thanks guys. Leave it at that. Hand you over to Sam. Catch you in the chat room. Have a good day.
Yeah, hi guys. Dollar, as we speak, just on the low of the day. So let's have a quick look over the pairs, and pound literally as we speak on the high of the day, just above where we're trading. You can see now we've got the resistance 2 level for the day on the futures, but probably more importantly the the highs that we've had back around here. Quite an important level, just above where we're trading. Then 133.50 on the futures, higher than 28. So one to bear in mind there. Obviously, with the dollar weakening, it's not to say that that's going to be the high of the day at all, but definitely a good area to be looking to take some profit if you are, in fact, long in this market currently. Euro as well, that trend line working so well on the weekly chart, and that euro now up to R1 as we speak. Similar sort of level from the 28th and actually the 25th as well, just above. Using those highs, definitely a nice area to take some of this trade off. While obviously the dollar remains weak and it could obviously push on through, you'd be pretty wise to take some profit around there, because obviously the overriding trend for this market is still to the downside. But good resistance point there for now. Dollar weak, seeing Aussie dollar as well just push to a new high above yesterday's high not too long ago. Resistance levels coming up for the Aussie dollar though thick and fast. You've got the high of the 25th in touching distance, literally by a couple of ticks to the high of the day. Through that, the high of the 22nd doesn't seem too far away. So while we were saying for a couple of weeks that perhaps if any of the out of the three markets that we looked at, pound, euro and Aussie dollar, if one of them was going to start turning around first, it would be the Aussie dollar. Quite resilient to the dollar strength as of late, and you can see near the higher end of that range since that low that we made on the 9th. So one to keep an eye on. If we do see continued weakness, it could now be that the Aussie dollar looks to continue its push higher. Obviously that level that we had from the 22nd would be quite important, and the 24th as well. I think in terms of an overall target for those that are perhaps looking for this longer trade and have been in a while, the low that we had down on the 28th of March before sort of retesting it on the 23rd of April, 76.46 would be a very key resistance point. Probably not too far away from any potential trend line at that time if we were to get up. Let's have a quick look at that. Yeah, so it might be a good opportunity perhaps later on for a short as well. Equities in the US just pushing on. Yesterday's highs for those markets, which puts on a 60-minute, not too far away. Still relatively range bound. Key level, I think, still going forward. I'll just make this chart a bit smaller so we can see. You've got that double top at the R1 today, so you've got to expect around that point would be a lovely area for some profit taking, or you know, if there's cash opens then you get a breakthrough, some stops to get triggered. So that would be the main focus. Obviously above where we're trading now, high of yesterday, high of the day before, and then the high that we had back on Friday as well, all to the upside. If we were to come back down, again similar to what we've said a couple of times, with just using the low of the day trend to the most recent low, a break of that, and then you can start seeing perhaps the pivot come to play, which sort of was the support area to the back end of the afternoon as well. So pivot, you'd expect some decent support around there if we were to get there, and of course the high of the 29th close as well, all sort of around that point. So we expect some decent support around there if we were to push down. Similar for the Dow and Nasdaq as well. Gold, with this dollar weakness, has been pushing higher. Relatively choppy over the last sort of few trading days. Really key level that we found back on the 25th, that we saw those lows from the 8th and the 9th. Another test of that and a breakthrough would be quite significant, and could be that's sort of the end of the 1300 handle as an area of support for now. We look to push back higher, but I would just bear in mind, we said it yesterday as well, just with gold having these pushes early on in the morning, only to come back down. We saw it again on Monday, so just bear in mind that it's obviously key resistance level just above, and the dollar could easily obviously turn around, and then suddenly you're seeing gold come back towards the pivot, which for me is quite an interesting area of, well, potentially support. The price action around here has been pretty good, So that's a pretty interesting level I'd be aware of, and similar with the trend line. So we talked about that on the S&P here for gold. If we get a breakthrough of that, it could be an opportunity, providing that the volume is there. Dollar yen, here we go, just on the pivot, already sort of messing around there, getting quite choppy again. Probably better off waiting for a break lower or higher to really look to get into this market. I would say, I think in terms of the dollar pairs, especially the ones that we're focusing on here, yeah, you're better off looking elsewhere at the Aussie, pound and euro. I think the yen side of things is half confused. What with actually is going higher and the dollar weakness as well, probably best left alone. I would say the higher the day to the upside, if you get a push through, just bear in mind the R1 and this trend line using yesterday's highs could be quite an interesting one to have on. A break lower, just be aware just below the low of the day, which is pretty good support. You have S1, so I think there's better markets. Similar with gold, really, unless you do get the push lower. I think currency markets are better traded elsewhere for now. Of course, that could change, but that would be my focus going forward. Oil, as Ant mentioned, you have the data at 4 o'clock, so it could be wise to sort of wait for that. Let me just refresh the chart here. Key level of resistance that we did finally break through into the afternoon. Pivot looks half decent as well as an area of support for this market. Really, if we were to get a bullish response to the data, then you can start eating away back at this move that we saw down on the 25th last Friday, Thursday as well, and the $70 might not be too far away as well, but one to bear in mind later on, I would say, when the data comes out, because obviously you've got a bit of dollar strength at the moment as well, sort of weighing on that perhaps. With the pound, as mentioned, is pushing higher and taking just going above that level. I know this is a bit choppy, this FTSE chart to see, but perhaps just holding that up again in terms of, you've got US equities that have been pushing higher, just coming under a bit of pressure here. The FTSE, but be aware of the pivot, especially if the pound continues to hold there as well. T-notes and the Bund have been on their lows this morning, just finding a bit of support, as we actually do see. You can see the Nasdaq out the corner of my eye just coming down a touch as well, so that correlation working relatively well for now. Let's have a look and see if we can get this trend on here. There you go, there, T-notes from yesterday's low and the lows from, what day is it, Thursday, Tuesday's lows. Break of that could be an opportunity, but again, T-notes in the morning, probably not the best product to be looking at. Any questions on the charts, please do get them in. And if not, if I don't speak to you guys, hope you all have a good trading day.